Hello and welcome to this weekly Outlook video at xm.com. I'm Maria Bashardis, and joining me is Senior Investment Analyst Rafi Boyajan. We'll be taking a look at the week ahead. So Rafi, let's begin with Australia. The Australian dollar managed to bounce back from the lows it hit after last week's dismal employment report. How might next week's data releases out of Australia affect the Aussie?
Well, we're not expecting anything spectacular from next week's data. We're going to have construction and capital expenditure data for the third quarter, both of which are expected to show a quarterly decline. So on the whole, even if we were to get slightly better numbers out of Australia next week, they're unlikely to significantly alter the outlook for the Australian dollar, which is that we might still get one more rate cut by the RBA, even though they've been somewhat less dovish lately, because on the whole, we've yet to see convincing signs of a turnaround in the Australian economy.
I see. Moving to New Zealand now. The Kiwi has been having a better time than its Aussie cousin lately. Is there any important data next week that could change this?
Well, we will be getting retail sales data for the third quarter, and that will be a good indicator of how well the economy did during that period. And of course, we're going to be getting the all-important business outlook survey by ANZ, which the RBNZ does watch closely. So the Kiwi did get quite a bit of a boost when the RBNZ kept rates unchanged unexpectedly at its last meeting. So any disappointment in next week's data could see those rate cut expectations being pushed up again, and we could see the Kiwi dollar fall back quite substantially.
All right, switching to Japan. The October retail sales print on Thursday will attract more attention than usual. Why is that, and how might it affect the yen?
Well, Japan raised its sales tax on October the 1st. The last time it did that back in 2014, we did see a big drop in consumer spending, and that tipped the economy into a recession. So next week we're going to be getting retail sales data for October. So any big falls there would heighten fears that Japan is once again headed into a recession, which would force the Bank of Japan to provide additional stimulus. We're also going to be getting industrial output and unemployment numbers as well. So investors will be on the lookout for any shock figures there. So any big negative numbers could see the yen falling substantially, as it would heighten expectations of a possible Bank of Japan policy action.
All right. Over to Canada now. We'll get the Canadian GDP growth estimate for the second quarter on Friday. How can we expect the loonie to react?
Well, the Canadian dollar has been on a bit of a roller coaster ride lately, because it actually fell quite significantly after the Bank of Canada turned unexpectedly dovish at its last policy meeting. And now this week we had the Bank of Canada Governor Stephen Poloz striking somewhat of a more neutral tone. Markets are still not clear whether or not the Bank of Canada will cut interest rates. And next week's GDP numbers could provide a clearer picture of whether or not the Canadian economy will require some sort of a stimulus. So the Canadian economy did rather well in the second quarter. It actually outperformed its major peers. In the third quarter, it is expected to have slowed down a bit. Whether we see a bigger than expected slowdown, that could see the loonie react quite significantly on the back of that.
I see. And finally, looking at the U.S., it will be a packed but short week, given that the U.S. market will be closed on Thursday due to Thanksgiving. What are the main highlights going to be, and how are they likely to impact the U.S. dollar?
As you said, we're going to go with Thanksgiving weekend next week, and despite the shorter week, we've got a packed calendar in the US. Some of the highlights, we've got housing figures. Now, the housing market actually started to slow quite early on, even before the Fed started to was thinking about cutting interest rates. And there have been some signs that we're seeing some bit of an upturn in the sector. So if next week's data was to confirm that, that would be dollar positive. The consumption, US consumption will also be under the spotlight next week. We've got the consumer confidence index and personal spending and income numbers coming up as well. So if that data does show us that US consumers are continuing to spend, maybe not at the same pace as they were in 2018, but nevertheless good enough to keep the economy going. That would again be dollar positive. And let's not forget the core PCE price index, which is the Fed's preferred measure of inflation. That's expected to hold at 1.7%. So on the whole, despite all the barrage of data, we're not expecting any of it to be hugely, to have a huge impact on the US currency. And in fact, the focus will probably remain on the incoming trade headlines and whether or not the US and China are close to reaching a phase one trade deal.
Rafi, thanks so much for joining me, and thanks for watching at XM.com.